Mr. Speaker, I have been very clear that I am sorry and that I have made mistakes. But the right thing to do in those circumstances is to make changes, which I've made, and to get on with the job and deliver for the British people. I recognise, though, given the situation, I cannot deliver the mandate on which I was elected by the Conservative Party. I have therefore spoken to His Majesty the King to notify him that I am resigning as leader of the Conservative Party.
What a difference a day makes. Just yesterday, outgoing UK Prime Minister Liz Truss pledged to battle on, defending herself in that brutal session you just saw in the House of Commons. Today, that pressure simply became too much for her. Her resignation coming after an embarrassing budget U-turn and high-profile cabinet departures. She becomes, by the way, the shortest serving prime minister in UK history. Just 44 days. A leadership contest will now take place in the next week. A general election is not scheduled for another 2.5 years, but it could, of course, come sooner. So what's the market saying about all of this? Let's bring in Yahoo Finance's Jared Blikre. And Jared, we were just saying you're surprised that the market reaction wasn't more significant. I guess you could argue the expectation had been building for some time.
It seems that way. And, all jokes aside, you got the head of lettuce and everything else, the head of state. Let's put that aside.
You need to explain that one a bit.
No, everybody's seen that. The British pound. Okay, so the British pound has gained 0.6% on the U.S. dollar. I would say we saw some fireworks, but these were just sparklers here. You compare this to some of the volatility that we've seen over the last few months. With all due respect to a lot of the serious plans that Truss had and bringing in some of those fiscal reforms, the worst time to do or the most difficult, challenging time to do those is during a time when you see incredible upheaval in the global markets. We simply don't have the liquidity to have spillover effects when these changes are large. So here's the British pound versus U.S. dollar over the last 3 months. Let me just put a line chart here so you can see it a little bit better. Now, we can see this is pretty close to 1. You take a look at the max chart in the global financial crisis, the pound was trading at 2 per dollar, so much stronger. It's been cut in half since then. And this, by the way, is, I believe, a record low down here. But this has spilled over into their rates market. So the whole deal with her cutting taxes was you had over-leveraged positions in the rates market, not seated. Nobody saw that coming. And the central bank there, the Bank of England, had to ring-fence the entire pension system, bail them out. And that worked temporarily, but that destroys the notion that there can be these kinds of massive fiscal reforms in the face of this global financial situation that we find ourselves. So I can put a heat map of the U.S. dollar here. Some of these are going to be inverse to the pairs that you're used to seeing here. But today, only the dollar is only stronger versus the Argentine peso. And then if we take a look at a year-to-date chart, you can really see some of the outsized move. ARS, that's the Argentine peso. You have the Turkish lira. Then you have the yen. Akiko, we've been talking about that recently, not necessarily today. But to finish off the top line here, we have Norway, we have Sweden, we have the British pound. All of this portends potentially future consternation and volatility in the rates markets, which we know can spill over into our own risk markets, a.k.a. stocks here at Akiko.
Yeah, FX, something we've been hearing so much about in all these earnings calls, especially the big headwinds against U.S. companies. Jared Blikre, thanks so much for that.